Nigel, I think we've got a full field now. Everybody's pretty punctual, so we'll get started. Good afternoon, everybody, and thank you for joining us for today's update on Tiverton Impact Fund. Pleased to be joined by Nigel Sharp, founder and MD of Tiverton. Some of you in the audience today who are investors in the fund haven't met Nigel yet, so I thought it'd be worthwhile just starting with Nigel, and Nigel can provide you a brief overview of his background and why he had the passion to form Tiverton, and then we'll walk through the syllabus as outlined in the email. Number one, update and overview on the fund with the current NAV, and we'll jump into a bit of detail on that. And a portfolio update, so the underlying assets and how they're progressing, and also the sort of future strategic direction of the fund, which Nigel and I have been discussing lately, and it's pretty exciting, but I won't steal Nigel's thunder. So Nigel, I might hand it over to you, and just for housekeeping matters, again, if there's any questions today from the audience, please submit them in the question box at the bottom of the screen, which is under Q&A, and we'll answer them during today's webinar. We expect it to run for about 40-45 minutes, and if there are any additional questions that you think of later on, I'll be sure to have Nigel answer them for you. So I'll hand it over to you, Nigel, to talk about all things Nigel Sharp.
Thanks, Anthony. Thanks for the intro. Hi, everybody. And welcome to the TAIF update. I'm going to refer to Tiverton Ag Impact Fund as TAIF today. That's how it's become commonly known to us and around our investment community. A little bit of background on me. Prior to starting Tiverton Ag Impact Fund, I had I grew up in agriculture and had a career in the property trust industry, listed trust industry, and a passion for conservation, which grew into the Orana Foundation, where we specialise in research and restoration of the ecological function. Really, we breed threatened species in that space, and it's become a very topical area because of the emergence of the terminology called natural capital and biodiversity, which are all linked into the climate world now, and valuations around natural capital are starting to appear in the market alongside carbon. So we formed up TAIF on the thesis of looking at agriculture from a regenerative perspective and a natural capital perspective, with a view to improving soil quality and natural capital markets, but also improving productivity of agriculture and the healthiness of the quality of agriculture that comes through. So TAIF's been going now for about 4 years, and I think at the start it was bringing in Harry Youngman, who was a farmer that I'd known for many years, and then we've grown it into a wonderful board with the experience of Deborah Kears and Andrew Hansen and Rich Gilmore, who've got very complementary backgrounds to what Harry and I had in the vision.
Thanks for that, Nigel. Appreciate that overview. So let's have a chat regarding the fund NAV. So as many investors on the call realise that Tiverton's not priced on a daily nor monthly basis as other investments commonly are, given the nature of the assets. It's priced more like a private equity vehicle, and Nigel and I have been discussing sort of what the current day NAV looks like, and you can take sort of a number of different points of view around the NAV and where it is at the moment, but Nigel's going to walk us through what the NAV looks like today, but what potentially the NAV looks like in the future, just based on the current portfolio. So I'll hand that over to you, Nigel.
So as background in talking to the NAV of TAIF, it's really interesting to see this last 12 months has been more than significant in the journey for TAIF, and that's really all around the emergence of the voluntary carbon market, not only in Australia but internationally. The financial papers are picking up on this daily now. Financial Review did a piece recently talking about the number of top 200 companies that are making pledges to become carbon neutral. We've looked seriously into the supply of carbon credits and where that's going to come from. We've seen since we lodged our ERF application for soil carbon in Tiverton. The price of Australian carbon credits moved from $14 to $23 now. There's forecasts. Well, the European regulated market is now at $91 in Australian dollars, and we're looking at the ACCU probably, which is the Australian Carbon Credit Unit, increasing considerably going forward. So if you go back 12 months, we were having discussions with our auditors whether the ERF program, the Emissions Reduction Fund pre-sale program for ACCUs, which we pre-sold, about 30% of what we expected. Orana at $14, they were wondering whether they were contemplating that it was a liability, whether we could deliver soil carbon. So you look at the shift just in, not from the clean energy regulator, but looking at auditors and valuers, and still today it's not reflected in the valuations or the NAV. And so what I was going to present today is a vision around the value of carbon and how it builds into the asset value. Carbon and natural capital values are going to become an underwrite, we believe, for land around the world, because there's just not enough land available at the moment, the way it's being farmed, to create the carbon credits required just for the pledges that have been made to date. So the other thing that really has got clearer for us as we've built the models around our soil carbon sequestration model, and as you all know, we acquired a company called Carbon Neutral, which is growing trees for carbon as well. It's got clear to us that it's the larger land areas that are the ones that are going to make the big returns out of the carbon. And so Anthony was touching on there a little bit about our strategy going forward. And we see ourselves with the larger farms doing large scale carbon sequestration projects, which lead to far more effective agricultural produce anyway, and probably divesting the smaller assets, being the orchards, because on a 400 hectare farm we can't do much in the way of carbon credits. So we'll go through the NAV, I guess, with that strategy in mind. And maybe if you wanted to bring that up, Anthony, sure, on the screen. What we've got here today is looking at our net book value as a start, as the auditors would look at our fund, which gives us an NAV of $1.31, as you can see on that chart there. Those farms have all been valued recently for the 30 June this year, so their current day valuations of those assets.
And just for reference, I think it's worth noting that investors came in at an NAV at $1.10.
And yes, that's right. Yeah, investors came in at $1.10. We've got in there, you'll see their Carbon Neutral at the $9 million, which is the price we paid for that. We're pretty bullish on that asset. We agreed that price about 14 months ago. It took a lot of due diligence to get through and complete that transaction. So, looking back, the price of carbon was, in some instances, was half what it is now when we were negotiating that transaction. And the opportunities for that business, because of the pledges being made, are fantastic, and it's got a really good front brand to corporates and to individuals. So that's in at the cost that we just settled only less than a month ago. The other one you'll see there, which is a minor one, is a carbon credits value at cost there. As we learned a lot more about the carbon industry the last 14 months, we have been investing in some carbon credits, which have been very profitable for us, and we're holding some carbon credits over going forward based on that. Each of the land assets you'll see there's some. It probably also feeds into the strategy we were talking about. Just running through those, Picardy at 47 million, we paid about 27 million plus cost for that. Sunland Fresh Fruit is about what is the smaller land area. It's 400 hectares. Picardy's 8,000 hectares. it's at about what we paid. So it's quite a reflection of the potential in the broader acre landscape. Orana Park's similar to Picardy. The cost base of Orana is sitting there at about $22 million, and Orana's actually got very significant upside. And it's a really good one to talk about from the perspective of regenerative agriculture. It's where we've registered a 4,500 hectare soil carbon project, but it's also where we planted 1,000 hectares of olives. And our favourite story at the moment is around those olives, because when we started with TAIF, we were doing composting, and we've evolved that into a liquid biofertilizer program, which is way more cost effective. It lowers the cost, but it's also increasing the productivity. So with the olives, it's been, since the planting has been 100% fertilised by our liquid biofert. We did a takeoff, just as a reminder, I think you guys have been presented this, but we did a takeoff agreement with Boundary Bend, which recently listed as Cobram Estate. They're the biggest olive oil guys in Australia and expanded worldwide now. They supported us into the helping us with genetics, and we did a takeoff agreement of our olives linked to their retail price. The one area we differed in opinion at the start of that was how we would run the agronomy side of it. We wanted to go down the liquid biofert. Sorry about that. We wanted to go down the liquid biofert. They were rightly wanting to be careful about that in what they recommended. But the long story short is that they're now very confident that we'll deliver our olives into full production at least 1 to 2 years earlier than what is the average in the market, and they've now started buying our product to put on onto their olive groves. And we're finding now on the back of that others that want to look at utilising our products on their farming. So that's leading us to another part of our strategy, which is contemplating third-party mandates that TAIF could manage, but I'll come to that a little bit later. So each of the assets has helped us determine this strategy going forward. The second page of this, the second step of this, which we're calling Scenario 2, real time, you can see there that we've got some value built into our ACCUs at Orana there, which is the pre-sale to the Emissions Reduction Fund at $14. And you can see how meaningful that is, 300,000 tonnes at $14. It's $4 million. We're expecting to sequester 1 million tonnes there, and by the time we get to sell the other 700, even at today's figures, which are approaching $25, they're very, very substantial numbers. So we're currently registering the Picardy farm for carbon offsets as well. The other two lines below that are, which the railway offset and the infrastructure offset, is because we're focused on assets that have got natural capital built into it, the value is emerging for biodiversity credits effectively, or vegetation credits as they may be. And the area that we set aside to do the threatened species breeding sanctuary at Orana encompasses about twice the area of that Orana infrastructure offset that we're in the final negotiations of entering a memorandum of understanding. So it starts to demonstrate how substantial the vegetation biodiversity type credit piece of the business is on top of the carbon credit operation. Similarly, at Picardy, we've got vegetation offsets available to us to continue to sell as well. And the last line is we've put in a line item about the olive production, because we've been able to, we expect, as I said, to be bringing that forward in our production figures and our income. But at the moment, the olives are valued at cost, the cost they are to put us in. So at a point, they go up substantially in value at the full production, but in our mind, they've come a long way, and we're through the risk period. We've got them growing particularly well, and they'll start actually producing some olives on the trees this year. So that sort of helps us sort of think about
how fast ahead of schedule is that? Is that a couple of years ahead of where you thought you'd be with them, Nigel?
That's what we're being told. We could expect it to be 2 years ahead of schedule. You know, at the moment we're working on one, just to be conservative. But you know, 2 years in 6 years, in 6.5 years is very substantial when you look at it at an IRR. So it's very, very exciting for us. The other thing about the olives, of course, is that they're irrigated, and that's 1,000 hectares of 4,500 hectares that's registered under the Emissions Reduction Fund. The irrigated olives we expect to probably do, you know, 2 or 3 times what we would have expected the cropping land to do in carbon sequestration. So it's going to be really interesting to see how much carbon we sequester into that olive grove over that period of time. But we would hope that will take us well past even our sort of initial forecast at Orana for carbon credits. So, you know, there's an additional benefit there. So we probably think we're going to get the olives earlier, probably producing more, and they're also going to help us with third-party sales of our liquid biofert business, which is in here at zero value in any of the scenarios, but it's becoming very valuable, not just to our thesis, but to building a case to sell to other regenerative farmers. The scenario 3 there, we've really looked at another step of selling carbon credits at Orana and Picardy. So just to reiterate, the ERF is 300,000, and we're just sort of trying to demonstrate the gravity of what carbon might do here. Is that if we did 400,000 at $25, you can see that's like 10 million at Orana. If we do what we expect to do, which is an additional 800,000, and we think by the time it'll be $35, you can see how substantial the impact of carbon pricing and carbon sequestration production is going to be on an asset. So, you know, that becomes, you know, that 10 becomes, you know, 22.5 or more. And Picardy there, yeah, again, we've put in a figure. We're only baselining Picardy at the moment, but again, it just shows there's a substantial opportunity in carbon credits. You know, and I'm referring back to the carbon market again now, but it's really only entered mainstream television in the last like 4 months, as we've seen the demand coming. And you know, I've seen Alan Kohler have the carbon graph up 3 times in the last 4 months, showing where the voluntary market's going and the regulated market in Europe is going. And touching on Europe, you know, Europe is a really powerful continent for agricultural exports and production. And so there, you know, a lot of what Europe's talking about at the moment is, you know, are farmers carbon neutral in their production? So there's going to be a scramble for Australian farmers to work in the space, but it's also important then for corporates to be declaring their position as to carbon neutrality and the dates that they'll get to that point. So I can't remember what day the article was, Anthony, but I'll find it. But there was an article recently in the Fin Review basically saying, you know, it's rare to live through the emergence of a market. It's happened a couple of times in journalists' lifetime. And what we are seeing is the emergence of a market. Larry Fink, you know, stated that, you know, the number one priority of his clients now is climate risk. So when we've got people of that ilk talking about it, we know that we're positioned well from that perspective.
Yeah, for reference, Larry Fink's the head of BlackRock, the world's largest asset manager. So,
yeah. So that's where we're heading, and I think you know, the pivot on the orchards, the orchards probably haven't lived up to the profitability we would expect for a number of reasons. But I think from a picture of where TAIF should be operating, it's pretty clear in the asset mix that we're better off in the larger space as well. So all of these, I guess this whole discussion, I hope is sort of pointing out why we're taking the direction that we're taking with the asset base that we've got.
And just for reference, so that the NAV calculations there were really just showing what the current portfolio looks like with potential uplifts going forward. But I guess what you're more excited about is how you're going to be retilting that portfolio going forward.
Yeah, ideally we'll sell the orchard assets. We've actually signed a conditional contract to buy another large parcel of land in New South Wales that's very similar to Picardy and Orana to deliver exactly the same type of outcome there. And we think we've signed a contract at a really good buy price. And if you wanted to put simply, I guess the thesis behind what we're doing is buying farms that have been heavily fertilised in the traditional agricultural ways in the past, which basically diminishes the carbon in the soil, and then apply our processes, techniques, and IP to building carbon, and therefore building more resilience in crops, better productivity in crops, and increasing all the impact that we're having. The beauty of buying carbon neutral as well is that we master plan our farms so that we either buy with significant biodiversity in the farm already, remnant vegetation, or we master plan them to return that vegetation to the farm. And carbon neutrals has brought us a great deal of IP and personal skills to be able to master plan these farms going forward, where we look at somewhere between 20 and 30% of farms going into biodiversity sensitive carbon planting, basically. So it's endemic plantings to the area that work for the insect population as much as it does for any of the threatened species we're focused on. So the holistic approach delivers all of the biodiversity impact that we're wanting to have anyway. We just overlay the Orana expertise where we can select specific species that are threatened and return those to the health to a health as well. And that's always been a passion of mine. But in focusing on those species, it's enabled us to learn about the ecological function and the whole ecosystem, and that all feeds back into the regenerative ag model.
And just on, I guess, improving the soil quality in the process you go through without, giving away too much of your IP. Do you just want for the audience to give them an idea of what that process is you actually go through when you buy an asset that has been farmed the traditional agricultural ways, and what you do to improve the quality of that asset and therefore the fruit that it bears, literally?
Yeah, so we started out our learnings by doing composting. That was sort of the way that it was done, and we turned back the clock a while there. Over time, we got to understand liquid fertilizers and making them in a natural sense with biome. And probably the best analogy to think about is kombucha, because it's returning, billions of the bacteria back into the soil, and the mycelium and all of these parts that make the soil come back alive. And it's when your soil is alive with lots of worms. The worms are the pests, as you can see, but the billions of other critters that come back to life in the soil are all of the ones that, when the soil's alive and working, it will sequester a lot of carbon naturally through that process. So we've developed over the last couple of years, developed a liquid biofertilizer plant on the Orana farm. The initial plan was to produce enough liquid biofertilizer to do the Orana farm so that we could meet our ERF obligations and sequester carbon. We've now scaled that up, and it's providing liquid biofert to the orchard properties as well. And now we're planning much larger plants there so that we get the cost effectiveness into those plants with the scale. So I think we started out aiming for between 500 and 1 million litres, and I think we'll probably end up, now that we're getting third-party people buying that, it'll become a profit centre. But we're aiming for sort of 6 to 8 million litre production within another year. And initially, when we started looking at it as well, we thought we could travel the product about 250 kilometres, but with the cost base that we're going to get to, I think we'll be able to travel at about 400 kilometres. So, we can pretty much cover Victoria with one plant now, where initially we thought we'd have to build a couple. So there's a real focus for us the next year on building plants and building that as a business. And we've called that business Regen Age, REGEN, capital A, capital G, capital E. And it's a partnership with a chap by the name of Kim Cruz, who was really a pioneer in this space and we brought him on board a couple of years ago as a consultant agronomist to help us develop up how we're going to do this production.
Thank you. Anything else you want to touch on in terms of the portfolio? I got a couple of questions. But...
No, I'm happy to go to questions. I think.
Sure. Do you want to maybe just shed some light on some of the interest you've been receiving from some like the endowments and universities regarding Tiverton and what they might be looking to do?
Yeah, we've had a number of approaches from groups that are interested in owning farms. At the moment, Tiverton's not of a scale that really works for the big institutions, and we're not sure that that's really the aim of Tiverton anyway. So we've got some discussions happening whereby Tiverton acts for larger institutions who would like to acquire land and farm this way under our management and selling them the product that we produce. So we've got a few discussions around 50-50 JVs, us taking an equity interest in managing the outcome. That includes interest from Europe, Australian institutions and large high net worth people that would like to own land as well. So we're just working through the best scenario to do that and make our impact as scalable as possible, but that would also introduce obviously service income into TAIF beyond just raising funds to own the land outright ourselves. So I think we'll see some changes there over the next 12 months as we develop that piece of the strategy.
Great, thank you. Are you looking at some stage shaping the fund up to receive new capital, particularly if you want to take advantage of purchasing more land?
Yes, we may do. Probably not in the short term. I think the scenario will be that if we open up for capital, it's because we found an acquisition or a co-investment that we want to do. I think that would be the next phase. We're not contemplating at the moment raising capital ahead of acquisitions, but if we do get to that point in the next 12 or 18 months, it'll be because we're starting to see the opportunity in that carbon space where we want to have money at hand. And I think if we did do that, we'd probably do it on the basis of commitment, subject to getting the property secured, as opposed to having a bank account with cash in it.
Yep, conditional. Fair enough.
At the moment, our focus really is to build the unit holder value in the fund and bed down a JV or two, and then I think we'll be talking about a whole different ballgame.
And what's the end of the road look like for the fund? What's your plan with it long term?
We don't have an end game at the moment. We've talked about in the past taking it to the public market, which is a real option. I think the next steps are the important ones, getting the external mandates and locking in and building value still in the fund. We think there's a lot of value in carbon neutral. We think there's a lot of value in building our fertilizer business. So we're probably reticent to go into too much dilution until we can build those parts of the business. And if we can build that without having to raise a great deal of equity, would be to the benefit of the unit holders, particularly.
That makes a lot of sense. That's probably it for me, unless there's any other questions from the audience. But sorry, Nigel, you have something to say?
Yeah, I've got one more thing which we're just working through at the moment, which is we're looking, because of this whole tilt to look at third-party mandates and how that would work. We're looking at internalising the manager in the fund, and then wanting to get that sorted so that we can then build the unit holder value. And again, it sort of demonstrates why the third-party mandate system will work well for us. But also, and I've probably stressed this a lot today, where we see the price of carbon moving to is going to have a direct impact on the NAV of this of what we're dealing with.
Huge impact. Yeah.
Yeah.
All right, well, we might wrap things up there. And as I said at the start of this webinar, if there are any other questions that come afterwards from the audience, feel feel free to email them through and we'll ensure that Nigel addresses them. Also, Nigel, if you've got that AFR article you want to shoot to me, I'll make sure it's attached to the recording that will circulate later today as well to all attendees. So if you could send that through to me, that'd be great. But look, thanks again for your time, and firstly, congratulations. It's a really exciting story. It's something you're very passionate about, and something that's now, pardon the pun, really starting to bear fruit for investors. So well done, mate.
Thank you. Thanks, everybody. And thanks for supporting us.
Cheers. Thanks, guys.
Okay, bye.